Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Irmen.
Welcome back to the podcast. Thank you very much for being here. I appreciate it. If you are here for the first time, thank you. If you are a veteran of the Farming Without the Bank podcast, thank you for that as well. I am going to tell you, because I've probably not told you in a really long time, that you should go buy the book, Farming Without the Bank. And I am booked out until May now at the time of this recording. June. Sorry, the beginning of June. So get your book, get your appointment scheduled. Here's what's been happening. A lot of people are saying, hey, add me to your wait list or your cancellation list, but I'm not going to book anything because I don't know what's going to be going on. And I 100% understand that, but we can't add you to the cancellation list unless you have an appointment. So go ahead, get your appointment scheduled, and then email us and let us know that you've been added to the cancellation list. And the reason that I'm not going to do it the other way is because you get an email with a bunch of information of what I'm going to need for numbers. Get that email, get all your numbers together, then let us know if you'll be ready to be on the cancellation list. We had a gal last week that somebody no-showed their appointment. In 5 minutes, she was ready because she had all of her numbers ready. So she got in that day. Didn't even have to wait till the next day. So be prepared, and then we can get you on that list. Okay, I know that I have talked about this topic before. I am sure that I've actually talked about it a couple of times. This may be a very, very short podcast because I want to address just this one thing that people are asking me over and over and over and over in meetings. And that is, Mary Jo, you and Nelson say pay extra interest. Where does the extra interest go? And in Nelson's book, in his illustrations, he actually shows that the extra interest is going into the policy. Now, he did that for illustration purposes only. That is not done for any other reason than illustration purposes of, hey, this is how much money you could have if you were an honest banker and you were paying yourself back. In my book, I do not include any extra interest because so many people were confused by Nelson's book about the fact that this extra interest could go in the policy. A lot of people also think when they read Nelson's book, that the extra interest is the interest they pay to the insurance company, that this interest that I pay to the insurance company is going back into my cash value. No, it is not. The interest that the insurance company charges you goes to the insurance company. Anything extra would go back into the policy if you have the availability of room to fit that in as premium. So let's say, for example, you have a premium of $10,000 a year. You've already put the $10,000 in. You can't put another $1,000 in because if you did, it would become a modified endowment contract and it would all grow taxable. Remember, there is this MEC, Modified Endowment Contract, MEC for short. There are MEC guidelines. We cannot put too much money into the policy to the paid up additions rider. If we do, guess what? The government comes in and it all grows taxable. That was not something they had to worry about years and years and years ago. But it is something that we have to worry about today. So when we structure your loan, Where does the money go? When you borrow money, you can only pay the loan back. You cannot put any extra interest into the policy. Extra interest does not go in as a loan repayment. It goes in as premium payment. Because remember, we are the ones deciding to pay extra interest. The insurance company is not charging us extra interest. They're charging us whatever the interest rate is, and then we decide to pay it back more. If you borrow $10,000, you can only put $10,000 back. You can't put $10,000 plus extra interest. If you wanted to put extra interest in, it goes in as paid up additions. If you filled up your paid up additions, you can't put any extra in. So what do we do with it? There's a couple of options. One, if you are going to be an honest banker, we could start a policy that would have a bigger premium amount. That bigger premium amount, it would be a spot, a warehouse, if you will, for extra money. Example, let's say that you said, Mary Jo, I can afford $10,000 of premium a year. However, I'm going to pay myself plus interest. We're going to put a little extra money in. Great. Maybe then we make the premium $12,000 a year. $10,000 is going to be out of pocket premium. $2,000 is going to be this extra interest that you pay yourself. That's fantastic. Now we have a place to put it. However, here is how I look at that, right or wrong. That's going to work for a couple of years. Then we're going to end up starting another policy anyway. So eventually you're going to be borrowing so much money at a higher rate that we're going to even outgrow that policy. So what do? If we started at 10 and we don't make it bigger, then maybe we take the extra, say, $2,000 of interest a year and we put it into a savings account. Then when we have enough money in this savings account, we can use it to start another policy. Or if we're structuring the policy correctly, we can use it to do extra money year one. I can structure the policy many ways, but if I structure it for a dump in, that means that year one, we're allowed to put more than, say, $10,000 in. Maybe we can put up to $25,000 in year one. Well, if we have this extra money sitting there and we're able to start a new policy, then we use the extra money from savings, from the extra interest, we use that to front load the policy. Now, Mary Jo, what do I do with this extra money in savings if it takes me 3-4 years to start a new policy? Well, use it if you need to. Use the cash, pay it back plus interest. You don't necessarily need a life insurance policy to do infinite banking. The life insurance policy is what? A place for uninterrupted compound interest, a place that we can get some death benefit. But the concept and utilization of the money can be done with a savings account. And so if you're going to have money in savings, you take it out, but then you pay it back plus interest. What will that do? That will just give us more money to start a policy, more money to front load a policy later. So there's a lot of people that think, oh, I need to be starting policies right away. If you want to manage 50 policies, great. Nelson had 49 of them. A lot of them were small premium policies. So I personally don't like to manage that many policies. So I will wait and start policies every 2 to 3 years. So they're a little bit bigger policies. I know I can pay them. I just don't have as many to manage. And a lot of times, depending on your age, we can't start really small policies anyway. So we have to wait regardless. So those are some options of what you can do if you want to be an honest banker, which is fantastic. I love it when you guys get that piece of the concept and you get it from Nelson's book, because that's what this is about at the end of the day, is being an honest banker. Really, it's about being honest with money in general and not overspending and beating Parkinson's law and all those things. So I hope that answered a bunch of your questions on this topic. I could go off and get onto other topics, but I want to keep this very direct because a lot of people have been asking me this exact question. There are two parts to your premium. There's the death benefit piece that buys whole life death benefit. There's the paid up additions that goes to cash value. If we're going to pay extra interest, it has to go to the PUA. It has to go to paid up additions. If there is not room to put it there because we've maxed it out, it has to go to a savings account. It has to go to start another policy. So make sure that if you're going to be an honest banker, you set up that extra savings account and just be honest with that money. If you have comments, questions, concerns, let me know. MaryJo@withoutthebank.com. If you've not grabbed the book, go grab the book. If you've not made the appointment, make the appointment. No, I'm not going to yell at you. I don't know why people think I'm going to yell at them. I get passionate on my podcast, you guys, but I don't yell at you in person. No, that would be rude. Anywho, I'm very helpful in person. So make your appointment. Let's talk to you. Let's get some things figured out. And then we can go from there. All right. Have a fantastic rest of your day.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.